Hey everybody, Jonathan Broadbent here, your host of UnWoke Academy. Let's dive right in because we've got an exciting action-packed episode. There's a ton of cool stuff to cover. We're going to get into mutual funds today. And let's start off by talking about what mutual funds actually are. When you buy a mutual fund, you're giving authorization to a company to buy and sell stuff like this, potentially. These are the bad things. So if you watched the episode a few weeks ago where I put this up in the background and talked about the wokadoodle stuff, that we find the far left companies, causes, and countries being invested in by our 401k, IRA, our brokerage account, our 529 plans. When you're depositing money into an account for investment, sometimes, and actually often now in this era, you're ending up with a lot of this kind of stuff. It's actually easier to figure out how much of this exists in your portfolio than you might imagine. So without further ado, we're going to dive into a list of some of the more common mutual funds found in 401k plans. So in keeping true to my word, what I like to do when I do these research types of projects is I do them using publicly available information. All I've got is a web browser, just like you might use. And I started by doing a search of what a group called Kiplinger, they're a news agency, what they consider to be the 100 most prominently used, most often used mutual funds inside of 401k plans. So using their list, we're going to dive in, see if any of these sound familiar to you. Do you have any of these mutual funds in your 401k? If you do, you might want to avoid them unless you are far left. And here's what that list looks like. Starting at number 1, assuming the most assets in 401k deposits, we're going to dive into what these look like and what the actual investments are. That's the important thing. What are these mutual funds actually investing in? Starting with number 1, this one is called the Vanguard Institutional Index. And if you're buying this, these are the top 10 holdings that you're investing in. Remember these names. These are going to sound very familiar as we look through this list of the most prominent mutual fund investments. This is not to say that these are great investments. Just pausing for a moment to illustrate why we end up with mutual funds. And you'll see as I go through, you're going to see some eerie similarities between most all of these pooled investments. The reason for this is, put simply, corporate equity index. There is a huge push internationally for equity index, which is a social credit score for corporations, basically. And the corporations that score highly are drawing the most money. And what you find is that we, the people, are being funneled into these companies artificially, which is giving preposterous, just outlandishly inflated share price values that make no sense. They have no correlation, in my book, to the reality of the profitability of these companies. So remember these. Not only do you not want to be invested in these, let's see in total how much we can estimate in American dollars is being funneled into these handful of companies. Moving on to item number 2 on our list. This investment is called the Fidelity 500 Index. Look familiar? I didn't have to change much. These are listed in order of holdings, how much money is invested in this mutual fund as a percentage. So you can see that the largest investment to the 10th largest. By the way, these are not total investments. These are simply the top 10 in each of these mutual funds. And again, as promised, what I'm using is publicly available information. In order to pull the most recently known top 10 holdings for all of these different mutual funds we're discussing today, I used a resource called Morningstar. It's morningstar.com. I'll make a point of putting that in the show notes so you too can follow that. And if you have a mutual fund, 2 things to know. The first is you can type in the symbol. That's 5 letters ending with the letter X. All mutual funds work that way. If you own a mutual fund, it's 5 letters ending in X, or simply type in the name of the mutual fund in any browser. You're going to find tons of information, and you can start seeing how those managers are investing your money. But look at this. This is nearly identical to the other one. And you're going to see a theme as we work through this list. There's a lot of nearly identical. And so what we end up with, and I see it all the time, are people that with a 401k plan that might have access to, let's say, 15 different mutual funds, and they'll send a statement in. The statement appears as if they're very well diversified. They're invested in 7 or 10 of those different 15 mutual funds, and they're feeling like, wow, I've got my money spread out all kinds of different places to kind of smooth the ride, if you will, and they're feeling like they have a diverse portfolio. But as we continue to uncover, for instance, with the the deep dive that we did into alias Foghorn Leghorn, that appearance can be misleading. When you end up with a whole lot of managers that are doing this over and over and over again, you're way less diversified than you think. And this is steering huge, massive international dollars into the companies that are going woke. So when you look at corporate behaviors, fine if you want to boycott the companies that you don't like, that are doing wokeadoodle stuff, but don't stop with the boycott. By the way, I like to call it vote your values. Dig deeper, go with me on this little bit of a ride and figure out where your retirement dollars are being funneled into. You may not like it, but hey, that's a starting point for us fixing it. We're going to jump down to number 5. 3 and 4 actually were invested in things like U.S. Treasuries and bonds, which we can get into in another conversation. I could make an entire podcast or actually a year series on whether or not our U.S. government is wokeadoodle far left. They certainly are right now, but I'm not going to drill down into U.S. Treasuries for this conversation. Let's simply focus on those that are invested in companies. And those companies, we can track and measure kind of how far left the corporate behaviors. These are the top 10 holdings of the 5th mutual fund on that list. So again, that's the Kiplinger list of the top 100 mutual funds used in 401k plans. Number 5 is the Vanguard 500 index. Sounds familiar. A lot of people are indexing to the U.S. stock market, if you will, what sort of serves as a proxy for the U.S. stock market. But here's what we've done. I went to something called Inspire Insight. So if you watch the interview with Matt and Drew, and you've heard me talk about an advisory firm called Inspire Advisors. Inspire actually created a public tool for you, we the people, to go in and type in the name of a company that we might consider investing in, and they kind of show you how wokeadoodle it is. That's my term, of course, not theirs. They're choosing to take a much more professional and polished approach to the whole equation. They're commenting on and sort of measuring the far left corporate behaviors of the company. By the way, it's important to note that there is great data showing that the managers out there, that means mutual funds and things like them, those managers who have avoided the woke have ended up doing better. So this is one of those have your cake and eat it too. You can avoid the woke managers, and according to much of the data that I'm seeing, you may end up better off financially with better earnings. That is tremendous. That's such a great have your cake and eat it too moment. Moving on to number 6, which is the Fidelity Contra Fund. I'm going to interject a note there. There's a long-standing perspective that the Contra Fund offered by the investment management firm Fidelity is sort of contrarian, which normally people would think is taking the opposite stance, that is contrary to the predominant prevailing opinion of investors. But if we think that, we'd be proven wrong, because look at the list. The usual suspects here. We've got Meta Platforms again. Meta is the parent company of Facebook. Berkshire Hathaway, Nvidia, Amazon.com, Microsoft Corporation, Apple, Eli Lilly, Alphabet Company. Alphabet, in case you don't know, is the parent company of Google and Regeneron Pharmaceuticals. So not contrarian. Item number 7 on our list is the Vanguard Prime Cap. So in this one, we've got a little break from the usual. It's not exactly the same lineup as we keep seeing in many of the other top pooled investments, but you can see here, I've color-coded the good versus bad, and the good, the positive numbers, this goes from negative 100 being the worst, most egregiously woke, all the way up to a positive 100, which would be a really good values-based company that you might want to invest in. So notice all the red numbers consistent throughout most of these investments. You can see, I'm going to call it simply the political leaning, because there's so much pressure between, again, that revolving door between Washington, D.C. and Wall Street, what used to be Wall Street and now is this cabal that has turned their back on America. But I'll save that for another podcast. I've talked regularly about how Wall Street has really turned their back on America and adopted this America Last policy that seems to adhere to the politics of Washington, D.C. But you can see it here with your money. This is how your money is being invested if you are in one of these mutual funds. And now we're on to item number 8 on the list. That is the Dodge & Cox Stock Fund. And here again, according to Morningstar.com, are the top 10 holdings of the Dodge & Cox Stock Fund. Notice all the red. Item number 9 on our list is Vanguard Mid Cap Index. This one's actually pleasantly surprising with a couple of not woke investments kind of peppered in here. We have a few that are scoring actually decent. And number 10 on our list of top 100 mutual funds found in 401k plans is the Vanguard Wellington Fund. And again, this represents a return to all the usual suspects. We do see the beginnings of inclusion of woke finance. So this is finance investing in woke finance using your money. Item number 11 actually represents an interesting conversation. I'm going to pause briefly to talk about what are called target date funds. I'm not going to go through each individual target date fund, but I will say that they're very commonly used in retirement plans as kind of a set it and forget it, almost a one size fits all complete portfolio. That's the way they're pitched to the consuming public. And investment managers love them because they're a way of capturing really all the investment assets once again from individual investors. So if you have a 401k plan, I hope you do, and I hope that you're funding it well, but also investing wisely within your 401k plan. Here's a little bit of brief backstory on how we got to where we are. It used to be common back in the 70s and 80s, after we moved out of insurance-based retirement planning and into us, we the people, being able to self-direct. We moved into an era for a couple of decades where it was common for one of these companies, these investment managers, to offer a 401k plan, and all of your choices within that plan were all their investments. So they were kind of doing both. They were offering the plan and also managing the money and collecting all the fees from all those different relationships. That's changed through the years with something called open architecture. So when you look at a 401k and somebody says, hey, you're a new hire, welcome, you've worked here for X number of months, now you're eligible to contribute to the 401k plan. Here is your menu. It's a menu of investment options, and you can see various different names on there. There's another caveat that we get into the weeds. I'm not going to spend too much time here, but here's something to know that confuses a lot of people. Some mutual fund issuers have multiple different names, and sometimes there's a platform that offers the 401k. Sometimes they also own a mutual fund company, and they love to load them up. So anyway, flash forward to now, those companies missed the days when it was kind of like shooting fish in a barrel, and their funds were the only ones in the menu. Because if you check a box and invest money in somebody else, that's a competitor to them, and they don't like losing that money. So one of the things that's happened is a migration into these target date funds. And it is an easy set it and forget it approach. I give them that. You can simply check the year that's closest to the year you think you might be retiring, and they do the rest of the work. But what does that actually look like? So the first thing to know about target date funds is they're actually what's called a fund of funds. It's a mutual fund that's invested in other mutual funds. And then those mutual funds have their own investments that they're managing. So I happen to have the Vanguard Target Date Fund 2060 available because we recently did a research and a comparative analysis for, and this is an alias again, Slate Rock and Gravel Company. Drilling down into the Vanguard 2060 fund, you can see all the Vanguard funds that fund invests in. So what are these funds investing in? Okay, so here what we've done is drill down into the holdings of the mutual funds inside of the mutual fund. So remember, we've got a few layers there. We've got the target date fund that invests in mutual funds, and then those mutual funds eventually get into investing in different companies. So here's your lineup of companies, and once again, you're going to see some very familiar names in here. So ultimately, the question becomes, what's the point of all these different investment managers and different names and different cool sounding, slogan-y approaches to their investment model, etc., if ultimately they keep all just investing in the same things? And clearly, it's not all, but when we're looking at the list of the top 100, how did they get there? I'm going to save that for a future podcast because I can talk in detail about the pressures that exist in Wall Street to get these types of things into your 401k plan. I started commenting on that in 2008 and was really involved, actually going back as far as 2002, 2003, in the processes that determine whether or not these types of investments are suitable to recommend for your 401k plan. By the way, as a side note, because it's relevant here, in my financial past, I actually have been involved in building some of the technology that builds and manages target date funds. And I know going back to at least, I want to say 2007, 2008, the technology clearly existed and is readily available for virtually anybody to build target date funds. Anybody who manages target date funds can pick and choose and cherry pick the best of the managers in all those different asset classes. What that means, put in simple sort of lay terms, is when you're looking for a really good large cap manager or a bond manager or global alternatives manager, etc., it's actually really easy with today's technology for somebody managing that mutual fund that's a target date to pick and choose. What the big managers don't like is for you to pick and choose. They want all of that under one basket. That's what Vanguard has done here. So you can see these are all of the listings, all of the different mutual funds that the Vanguard target date fund invests in are Vanguard mutual funds. It's all sort of herding everybody into one pool of investment management, and maybe they're not the best in all those different asset classes. In fact, I argue that there is no manager out there that consistently can claim to be the best in managing all kinds of different assets. When you look at global, international, emerging markets and all those sorts of things, that gets very nichey. And the people who do a good job at that should have an at-bat at earning your business. They can't when you're captive to one manager doing all of the work and all of the investment due diligence. This is item number 13 on our list. This is the Vanguard Total International Stock Index. So you're starting to see another theme emerging here, and that is that Vanguard, just through offering really, really cheap models-based investments, they have captured a significant portion of the investment market. So what are they ultimately doing with all of their global investment dollars? What we're talking about here today in this list pertains to 401k plans, which is exclusively US based, but ultimately Vanguard invests and manages money globally. So what are they doing with it? Well, here we have their global position. Not all bad, but certainly a lot of woke in this portfolio. This one actually is really interesting, and we should pause here to look at what happens in the small cap world. This is the Vanguard Small Cap Index. And I've said for a long time that it is the mega cap, the giant mega globalist firms that are least likely to be able to avoid that gravitational pull of that corporate equity index. And most all of everything that we see in the international stage for those big globalist corporations leans far left and is super, super ultra woke. But when you start to get into small caps, these are companies that can more easily avoid the woke. And we've got some decent and interesting, compelling investments ultimately in this one. And I think that this index, for those who are pursuing non-woke, looking in the small marketplace makes a lot of sense, including the right amount and a proportionate amount of small company investments makes a lot of sense. And here we are again, item number 16, Vanguard Total Stock Market Index, and it's all the usual suspects. There was a period of time when the American Funds company was the largest investment manager, I believe, in the world. So let's see how American Funds are doing. American Funds Growth Fund of America. Look familiar? All the same investments. This isn't the investment portfolio people should want. And the investment manager T. Rowe Price makes an appearance in our list of the top 100 mutual funds in 401k plans. Let's see how T. Rowe Price is doing. Microsoft, Nvidia, Amazon, Apple, Alphabet, Meta, Eli Lilly, Visa, MasterCard, and ServiceNow. Sound familiar? All very far left woke. So now we're into the Vanguard Extended Market Index. We do have a mix here of good and bad in this portfolio. There's some woke, there's one company here that's not yet rated, and a few that actually do decently on scoring. So here we have the Fidelity Growth Company. That's actually the name of the mutual fund. So how does the Fidelity Growth Company differ from other Fidelity mutual funds that you might buy? I'm really not seeing it. Item number 30 on our list, we've got Harbor Capital Appreciation. So Harbor finally makes an appearance on our top 100 list. So let's see how Harbor is doing. Are they doing anything differently than the other managers? We've got NVIDIA, Amazon, Microsoft, Apple, Meta, Broadcom, Eli Lilly, Netflix, MasterCard, and Visa. So now we have item number 31 on the list, American Funds, American Balanced. By the way, I've skipped a few in here primarily just because those are mutual funds that are invested in US Treasuries and bonds and those sorts of things. We'll save that for another conversation. What is it doing differently than other American funds? Let's look at our list. Look at the red. There's a lot of woke here. Earlier, we had a mutual fund called the Vanguard Wellington. This one is called the Vanguard Windsor 2. This mutual fund, how does it differ? Microsoft, Amazon, Apple, Alphabet, Bank of America, Taiwan Semiconductor, United Health Group, Medtronic, Meta, and Elevance Health. Very little difference there. We have number 38, the Fidelity Extended Market Index. This one's not terrible. We have a little bit of wokadoodle in there, but some actual interesting sort of compelling investments. And it seems we've saved the best for last, and best is kind of a low bar in this equation. But this is item number 38 on the list of the top 100 mutual funds, according to Kiplinger. This is the Fidelity Extended Market Index. And this index is not entirely wokadoodle. So we've got some compelling, interesting looking stuff in here that's not far left. And this wraps up the time we have for today. Just remember, if you want to avoid this stuff and investing in it, you can boycott for sure, or vote your values, as I like to say. But remember to drill down into your investment dollars. Every little bit counts. Even if you have a small account somewhere, some IRA that you've turned over to an investment manager anywhere, or you just parked it online, or have given it to a mutual fund manager, remember, please, the pressure is unbelievable right now in the world of Wall Street to funnel as much money into this stuff as possible. Your money is being put into the very things that are driving against Western values and our America last. Let's make some effort here. We're here to help you. Send over your information if you'd like us to drill down on the funds that are available to you in your 401k. We'll keep you anonymous. We'll do the same sort of research. I can't guarantee we're going to get to everybody, but we're going to do as much as we can to uncover this kind of stuff. I'm Jonathan Broadbent. Thanks for